So this is the daily time frame, and as you know that our analysis begins on the daily time frame. As you can see, this is just the checklist. This is the daily time frame. So let's check here. So step one is to look for direction bias. We use 1 or 2 candle rule in Heikin Ashi candle. Now there are different kinds of candles. So the one I prefer is Heikin Ashi because of how smooth it is. As you can see, everything is very smooth. You can see this is very smooth compared to the normal candle. You can see that it's very smooth. If it is going up, it's going up. If it's going down, it's going down. So you can capitalize on the move as you compare to the normal candle. This is the normal candle sticks, and then you have the Heikin Ashi candlesticks. So start using Heikin Ashi candlesticks so that you avoid trouble and confusion. Like if you just check that situation here, if you check here, the way here is very smooth. Let's give for example this place. This place is very smooth. Let's even just check from this point to this point. We can see that there was a clear selling pattern here, and even when the buy was here, it was also very clear. And then now we have a very strong bullish movement here on this is Heikin Ashi, so you can comfortably be buying that market until further notice. And this was approximately how many days of buying? You can imagine that is 43 days of non-stop buying. Now let's switch to the normal candle and see what happens there. On the normal candle, let's check the level of confusion that was here, especially on this downtrend. This one you can see there was a lot of psychological problems to deal with. You can see here there was a lot of issues. Even here, as you can see, there was some sort of selling pressure coming in, and then there is this up to this particular point. Now if we extend it like this and then just try to see movement here using the Heikin Ashi candle. Look at how smooth this place was. This was very smooth from the start to the finish. If we are buying, for example, here we bought here, when we started selling here we sold, showed some. Here is the only confusion point that you wanted to buy, and then tried to buy here, it failed. So when it fails very quick. That is the importance of using Heikin Ashi. When it fails very quick. But when it does not fail, it doesn't fail. It keeps moving in that direction until everything is very clear. So I want also to add to your note that that for a Heikin Ashi to be strong, it's the low or the high, depending on the market, should not be having wicks. For example, let's check here. The day the market, in most occasions, nearly more than 80%, if we are in a downtrend, then we have a candle that whose high does not have a wick, like in this case. Or let me just use another marker. You can see here there is no wick onto this particular point. That means that it's a strong Heikin Ashi candle, and therefore that should be the beginning of a big move. Now when it starts to have wicks on both sides, then it means the market is now now again being choppy. Now check this. There was wick on here. It shouldn't be below, and that is why this is like a indecision candle. Now when again we had a candle that didn't have a high on the high, we are on that trend. We had a massive push downwards. So same here, you can see we had no candle, first candle here on a buy move, closed and opened without a wick on the below, and we had some push to it. Again, this is a fake out because there is no, it didn't have a strong, it is not a strong sell. So as as time goes by, you'll be able to see that if you want to have a strong candle, you must have you must check the bases. So the base like this, we are deeply into it. So here, this was a fake out buy direction. So the following day you can just keep now a strong sell downward, then until it didn't work out. Just like everything else, not everything will be working out. Here, this was also a strong buy, but it didn't work out. But it corrects by having a does not fix, and for now can load in more positions from the second day moving forward. So you can see this one now was a very good indication, and then again this is now another fake out because we are having a low here that forms a wick, and therefore it was just a fake out for buys. Then we continue, we have another one here that is very strong. That means we have to keep selling until this one was also a fake out, but it sustained again until we had this strong one, and then now the following day we were just buying, and then again there was a change. So you can see the way it is easy to read these candles compared to the normal candles that we have. I hope that is something new that you've learned today for the people who are listening to me. Can somebody confirm that?
Yes, sir. Loud and clear.
So please just a minute so far. So please take note that for the daily, and in most occasions I switch to using Heikin because I'm avoiding analysis paralysis. Now look at this case. If your job is to buy, even if you get stopped out on this buys, how many wins do you think this would be? Like this month here would have been like an 80% win rate, because you're being faked out and immediately you go in. Same to even if we are here, we would still take these trades like this for a sell, and then now we see some buys here, and we keep buying. There is so much indecision, so you can either wait or just keep buying, then until we get here. This one was another strong one. You can see this one was a strong one, as much as there was a wick below, and then again we had a strong confirmation here. We sold, and then we were supposed to sell here. We didn't sell, so it didn't give entry, or it gave a break even trade. And then there was also another indecision here. So not all the time is rosy, but in most occasions it will be rosy for you when you use Heikin candle. If you start trading when the market is here, for example this, obviously it is not going to serve you justice, and you have to accept that not all the time the market will be perfect. So that is the analogy behind the trading days. Now, like this case, this is 36 days, but I'm very sure that out of these 36 days, as much as we had enjoyed a rosy rise like this was a pullback, and it was necessary anyway. But at least there were trades. So that is the most important thing that you need to be focusing on. Again here, when the market shifted here, when we had this confirmed one, this one here confirmed here, you can see that again we went back to the rosy days. This one is another indecision. You can either buy or just stay out of the market, or you can even slightly sell. There's no problem. You go with what 4 hours is telling you. For example, if this day, let's use this day for example, this day, let's see how 4 hours is going. So this is on February. I don't know if 4 hours will be able to make it to this point, because replay bar is not allowed here on this particular candlestick. So this is on 1st of February. So we can see that this looks like an indecision. So let's see how the market operates here on this particular day on 4 hours. So let's see if the market will give us something, any direction. So we know that the market is buying. So if we find directions that are showing us to be buying, you would easily be buying. But if it wants to sell still, you can look to sell. Now, so this is the first candle of the day, and then this is the second candle of the day, and then this is the entry candle. It takes the liquidity as usual here. Then we need to shift to 5 minutes and get the entry. So this one was showing us possibility of buying. I am not sure how long it bought. And then immediately started buying. We got here liquidity rate of this buying candle, and then the buying pressure kept moving on. So what about the following day? So you can see that not every day will be rosy, but I'm thinking that it gave some entries on that particular day, but it didn't just sustain. So this day also another indecision day. So this day, let's see what the day is showing us. I nowadays don't like back testing the days that looks very good, because you get used to only looking for the days that are doing well, instead of also looking for the days that don't perform well. So when you look for the days that do not perform well, you get used to the fact that not all the time it will be rosy. Now let's see, the day starts by buying. Then we have another day. This is still buying. You can see even after liquidity rate here. Now there's another confluence that I'll add you to, that you can be gauging whether you if such situation happens. But as you can see clearly, we are on the opposite side of the market, because the liquidity that was being raided was on this other side this day, because 2 days have been showing sales, and therefore this was a very good trade opportunity that gave more than 1 to 5. This day also we are on the wrong side of the market, because the liquidity was raided this side, and therefore the market went this side. So those kind of situations will be arising, but they'll be a little bit fewer when the direction is clear. That is why I'm having this particular thing here over here over 1 time frame for direction. Bias, use 1 or 2 candles rule in Heikin Ashi. Now use 1 day candle. I advocate that use 1 day candle if the market closed without wicking the direction we don't want it to be wicking. I don't know if that is clear. Is that clear? Use 1 day time frame. Only use one candle as direction. For example, if there is a change of direction, if that 1 day candle is not having wicks where we don't want it to be having wicks. For example, let's use this as an example. Let's check the day that now. Collins, you have to mute yourself. Collins, mute yourself. Okay, seems you heard me. So when a day like this, yes, this one, a day like this day here, when you see it like this, there's no wick on top here. That means that this is a very strong sell signal. So the following day, clearly look for sells. Now this one is indecision also. This one is indecision because it is buying, yes, but it is having wick below it. So the following day you can either choose to buy or just relax based on where the market is taking you. Alternatively, you can add with another confluence, though I don't like talking about so much because I'm trying to make this thing as simple as possible. So let's check this day, for example. We go to 4 hours and check let's check 4 hours. So as you can see here, 4 hours is selling heavily, so we have no business buying. So that's the first candle of the day. This is the second candle, and then this is the third candle of the day where we are supposed to be selling. Now liquidity has not been raided, that is okay. This one has not raided liquidity here, but then I want you to note something here very, very important, and I'm going to repeat it so that you don't forget. Now there's a situation whereby Heikin Ashi will not be raiding the liquidity we want it to be raiding, and for that reason, whenever you come to the chart and you want to check for liquidity raid, always check the other candles also if there is any liquidity raid. If there is any liquidity raid on those particular day, on those particular candle, the normal candle, for example, let's check them to be, let's place them to be 2. If there is this is on the, I want it to be on the 1 day, no, 1 4 hours. This is the normal candle. You'll be checking it concurrently for possible liquidity raid. So let's check when is this day. This is on October 24th. Yeah, this day here. As you can see, this side you may have a liquidity raid, but on the other side you don't have a liquidity raid. So if you check here, this is where you needed to have the liquidity raid. As you can see, it's up here, but then this is the candle of, we were waiting for liquidity raid to raid this one, but it didn't raid this one. But again, this one got it raided, and when that got it raided, there's no problem. You can go, this is at 12 p.m. you can go to these sides and continue with looking for the raid. As you can see, this is 12 p.m. candle, so you can shift to 5 minutes and get your entry, because we've already had a liquidity raid that side. It's so simple. This is on 24th. On 24th, I don't know if I'll be able to reach it out. So for the liquidity raid, just be monitoring in either way, in either of these candles, and then entry as usual you can take this side. And another thing is, whenever you are taking, this is December, will we reach 24th? Let's see if I can replay this section. Will it replay? Yes. So for this one, in our normal candles, we have to go with 15 minutes. For the Heikin Ashi, we go with you can see this one was 15 minutes raid, and then our entry was supposed to be here. I would have obviously, this, if I was in this trade, I need at least 200. I should be having less than 200 pips stop loss or points. So obviously I would have to wait for this particular thing to pull up there, so that I can get a good entry and a good risk to reward. Now you can see it didn't pull back. It didn't pull back. Or what about this other side? So it is refusing bar replay. So bad. It is refusing bar replay. Let me go back to 1. So that was, I think it was on 24th. Should be able to find that line. I hope you guys, you are following. For yes. So this is, I'm using this German 40 or German 30, whichever you want to call it. There's no problem. What is important is that this thing is universal. I just prefer this indices, because indices don't pull back crazy like this is my last 5 minutes. So unfortunately I can't get more of 5 minutes this is November 24th. So unfortunately I can't get that 15 minutes. I wanted to look for that entry. Can I get it on 15 minutes? So my chart does not allow me to reach those backward charts. This is on November. So this is October. Here we go. Yes. Now if you go to Heikin Ashi, you will realize that 5 minutes is just nearly one candle of 15 minutes. Two double 5 minutes close. You can see the way here it was very clear. So I'm very sure 5 minutes double 5 minutes entry is somewhere here, and as you can see, this one gave a nice, this should be full TP, or you can add in some extra. Probably I would have taken that a 1 to 6. Very nice trade. And as you can see, there is a lot of pullbacks. So you can see this was a very good raid, but on Heikin Ashi itself there is no raid in 4 hours. So please take note that you will be shifting and checking where there is raid, so that you get that raid without sticking so much into Heikin Ashi while the raid is already happening on the other time, on the other candle charts. So this is just an example. Now the following day, as you can see, we are supposed to be selling. So let's see the following day. This is 8 a.m. candle. You can see there was some sell opportunity here. I'm going to go throughout the checklist. I'm just giving you an example, and then I'm not sure if it worked. So unfortunately I can't reach 5 minutes so that I can see if the entry was happening out of the window time. We don't need it, because if the entry is happening in the last hour, let's say this is 8 a.m. my time, this is Kenyan time. If the entry is happening at 11 a.m., we don't need to take that entry. That entry is flawed, and therefore will lead to these losses. Now that is why maybe I really needed to get entry for this particular section, but unfortunately we can't get that. So let's proceed with the checklist as we refresh our minds. So that is on the daily time frame. So on the daily time frame, we've already explained. So I want you to just note of one thing on the daily time frame. Whichever you choose, it's okay. If you choose that for every one candle that changes direction, that changes color in Heikin Ashi, I am going to go with it. It's okay. The only problem is that when it is ranging, you will be a little bit disadvantaged, and you will be forced to wait for 2 days in a row to close in your direction to determine that direction. But let's say, for example, it's not ranging. Now if this market is ranging like this, you may have problems, because for example, there was a close here, you wanted to sell, maybe it worked here, and then the following day you wanted to buy. You can see the way with this big rejection, most probably you didn't get entry. The following day you sell, works, you try to sell here, maybe it doesn't work that day, and then you buy the following day, probably it works or it didn't work out. Then you try to buy here. Now this one doesn't work, and the good thing is that 4 hours will try to prevent you from getting into trades. And then the following day you try to sell, it works, sells, may or may not work. You try to buy here, it doesn't work, or maybe it works, I'm not sure. And then here you try to sell, doesn't work. You try to buy, it works. You try to buy, does not work. You try to sell, it works. So you sell based on the you buy or sell based on the previous day's direction. So when the market is ranging like this, it is rather good to wait for 2 days in a row, so that you can get good candle, good movement, or good clear direction. But alternatively, one can still take you into that direction. When one candle closes on Heikin Ashi, you can still go ahead and trade in that direction. Now you can add another confluence, which is to check if as much as, for example, this day, as much as this day closed bullish, signaling that we could be going to take these highs, what about this day? Is this day supported with the two candles also in the other type of the normal candle? If it is supported, then well and good, we can trade that direction. So let me just go to 1 day. That is another confluence that you can add to it if you like. This one. So let me remove this. Yeah, there we go. So let's just check. I don't know when this day is. This is June 12th. So June 12th. Now you can see this is what I mean. If the following day, this is the day that this is June, market closed bullish. Even in Heikin Ashi, it closed bullish. But if you check, ideally, a good day that should be moving forward, in most occasions, you realize that if this is closing bullish on a normal candle, it should have been followed by another bullish close. Let me give you an example. Let's check this here. Yeah, you can check this day. This day candle closed bullish, but as you can see, at least there is some backup. At least it was closing bullish in this direction. Let's check another one. This day here closed bullish. So this closed bullish. So let's check if on 30th or something there was bullish. You can see it is followed by two bullish. If it is followed by two bullish like this on a normal candle, then it means that that direction is high probability, and therefore you can trade it. Now let's check this. This is selling signal on Heikin Ashi, which is our main focus. But what about the previous days? Is it selling? No, it doesn't sell. We don't have those two candles consecutively. So if we don't have those two candles consecutively, please avoid taking trades in that direction on 1 day time frame. I don't know if that makes sense. Let me repeat. If you want to get your direction using one candle in 1 day time frame, I advise that you cross check it with the normal candle, so that you can confirm that though as much as we are having only one candle close in that direction in Heikin Ashi, it is supported by two double close in the normal candle. I hope that makes sense. So let's check here again, like this day. You can see this day. This day there was a candle close here, bear, signaling bearish. So this following day we should go ahead and sell, because this day we are supposed to be selling this on 10th. Because if you come here, there are 2 days that are following that has been selling. So this is confirmatory that this day we can sell. So we can switch to 4 hours on this day and look for sell opportunities. This is on 10th June. This is on 10th June. Let's delete this one. July, sorry. So let's check 4 hours. Let's check 4 hours. So this, as you can see, we have a good trade opportunity here. Now the problem here is that I can't confirm if there was entry, because we don't need to get entries in the last 4 hours candle. Last 4 hours, the last 1 hour candle. Let's try 15 minutes and see if 15 minutes is going to reach there, and see if the entry presented itself on I don't know what I'm doing. Just a minute. Just admit all once, so that it can be, you can have easy time. So let's see if there was opportunity The reason why we have this thing as the last time over, we don't take trades on the last 1 hour of that particular entry 4 hours candle is because the last hour of every 4-hour candle there should be a small pullback. It's always a fake out. So if you entry into that particular candle, just probably you will be, in most occasions, you will be liquidated, and then it will be like a fake out. So you rather wait for the new high to be taken, and then you get into the trade. Now this is on October. Oh, I'm going to July. Did it make it to July? Let's see. We don't take trades on 15 minutes unless you're using the normal candle. So personally, I prefer to just use Heikin Ashi's 5 minutes. Heikin Ashi's 5 minutes candle for the trade. Are they over? Unfortunately, they are over. There's nothing we can do about it. So this is they are over on August. So I wanted to confirm this particular trade, but unfortunately there's no way I can confirm if the entry took place at the wrong hour, so that we avoided that loss. So let's resume back to the normal candles. Sorry, not the normal candles, I mean the discussion. So let's check, for example, these other 2 days, so that you can get the direction for tomorrow on this particular candle. Now this candle is saying that there was opportunity to buy here, because this candle closed bullish, as much as it is a fake out. So because it is indecision, that is because there's both sides. But let's confirm if the other candles confirmed it. As you can see, it was not the best confirmation, because this was on 1st of January. So this is not the best confirmation. So ideally shouldn't be traded that day, because we don't have enough confirmation for this particular day. So let's check another one. So with this candle closing on Friday like this, we can still try to long the market. If it's a clear opportunity here, tomorrow we can still try and long this market. Let's see what 1 week is showing us. Now 1 week is selling, is on a downtrend. So let's see the other candle. Sorry. Okay, it's showing that the other candle is having another perspective, and it's showing that we've taken a liquidity raid on this one, and therefore we should be a little bit selling. That is according to what this candle is telling us here, which is okay, but that is not important. So we stick to what Heikin Ashi is showing us. Now I don't want you to be stressing over one week's analysis, because it's not that important per se. So this is telling us that we are supposed to be selling. That is what these candles are telling us, that we are supposed to be selling, which is okay. You see something that happened here. We should be selling. At the same time, it's showing us possibility of range bound, and then it could be also like this. Never know. It could also be like this. Never know. So provided that we already have one candle, it's very rare for you to see. You see 1 week only once, and then it is disobeyed. But if it is now two like this, you can see at least it gives some momentum. This one failed, but in most occasions at least it gives something. 2 weeks in one direction, there was some momentum that took the high of this. There's no problem. So 2 weeks in direction, unless it wants to be behaving like this, where we have 2 weeks buys but we have small indecision. So ideally we are expecting sales next week on this particular pair. We are expecting sales on this particular pair. Let's see how the day is going to perform. If we see a clear, because all the same we are still having indecisional candles of Heikin Ashi. If we see anything that is clear, like sell with low candles, with candles without wicks on the upper side like this, then that day that we will have the first one, we can really go heavy and take and look to see to sell this candle. If we just have, for example, this one, the second day we go heavy because we know that we are going to get opportunities to sell those particular days. I don't know which day is going to be, but if it is on Monday, if on Monday we get a candle, this was on Tuesday. If on Monday we get a candle that is selling here and doesn't have wick on top, we will just go heavy and sell. Now if we get a candle that does not have wick on the below and it is a buying candle, there's no problem, we are just going to keep buying. But as of Monday, we need to just go with this trend that is already showing us here. This is buy, so we can just keep buying based on what 4 hours is telling us. 4 hours is going to prevent us from getting unnecessary losses, so don't worry. Now check previous 2 candles, 2 4-hour candle for the market movement. At least one should have closed in your direction. Now if a candle does not, if you check 4 hours next, because this is DAX, we are looking for the third candle. That is where we are looking for entries. Every day we have to look for the third candles. Now out of those third candle of the day, they should be closing in your direction. Let me give you an example. They should be closing in your direction if the market is clear, not choppy like this. For example, this is there was a sell opportunity here, because you can see that this is the entry London session. Then we have this is a selling candle, this is a selling candle, this is a selling candle. So you can see that at least 2 of the candles prior to our entry candle is already selling. That is high probability. If it is 2, it is A+ setup, especially if it is backed up by 4 hours 4 hours supply and demand. You can see we are moving up and down. So if it is pulling back somewhere here, we want it to be pulling back. Now the good thing about indices is that unless they are ranging, they won't be taking this high. So that is the good thing why I like trading indices. But for pairs, you expect that it can even take this high before it comes again here, react here, and then after reacting there again, that is when now to get a small pullback for the SMT, and then now we drop. That is why I stopped trading currencies, because I don't want to be in that particular situation whereby the market does not obey supply and demand, because there are 2 pressures: the pressure from one currency of another country and the pressure from another currency of another country. But for indices, there is only one pressure, and either the pressure is on the upside or the downside. So same here, this day here, you can see that this was the entry candle. Now out of this entry candle, we were selling heavily, and this day we were supposed to be buying. So that means that we didn't have a trade. That is how 4 hours is preventing you from getting unnecessary chopped out. Oh, this one, yeah, this one we can sell. Yeah, this one it was okay to sell here, because we had a selling candle. So maybe unless we confirm it with the other candles, and then we can sell. Can we confirm it with the other candles? Yeah, we can confirm it, as much as it is not clear. So it is saying that it was not clear, it was only having one candle close in the direction, so it was a 50-50 deal. So if you wanted to sell, for example, on that particular day in Heikin Ashi, as usual, you can see that there was 2 candles in our direction already, which is confirmed. These 2 candles, we only confirm them in Heikin Ashi, not in the other candles. The other candle we only check for liquidity raid. So there was a liquidity raid there. So when this liquidity trade happened, we shift to 5 minutes. We shift to 5 minutes. Let's see. This is the problem of Heikin Ashi. There is no backtesting in it. You cannot bar replay. So as you can see, this is where the raiding happened. The raiding happened here, and then we formed. This is where 4 hours started. Our entry 4 hours started. Then look at what happened. It came until it came here. This is where it provided an entry. And if you check this entry, this is 12:25 p.m. Kenyan time. That is the last candle. That is the last hour of that particular 4 hours, and therefore it is a fake out. So we don't sell. We relax and wait for this again to be raided. And when it was raided, it gave an opportunity here. Let's see, this was 2 p.m. So this one was squarely it was squarely dependent on how you place your stop loss, because now we had 2 double close in our direction, and then the entry was supposed to be at the retest of this somewhere here. And then for me, this one I would have been stopped out, and then I would have re-entered because I would have needed my stop loss. I like it to be 200 for enough breathing space. So like in this case, if it is more like this, this would be 96, so I would maybe make it 150, there about 150. So it depends with how I would have seen the market. So 150, so that you avoid also spreads. The spreads 150, 1 something. So maybe I would have stopped out, I'm not sure, or I would have just gotten a tighter stop loss somewhere here, but I wouldn't, because 100 is the spreads in it. So if you have it just below 200, it is still fine, and then this would have been my take profit here, or I would have left immediately. This 2 double close was formed here. I would have left here if I wasn't stopped out. Now if I was stopped out, there's no problem. I would have still gotten in when these 2 candles close in my direction, and then we have 140 pip stop loss. There's no problem. Now the good thing about the indices is that if it is not ranging, if the market is very clear, there is no stupid pullbacks that we see in currencies. As you can see, this one gave, if you wanted to hold for long, it went for even 1 to 10 risk to reward. Very nice. Still, it didn't even come to entry. If you still wanted to hold, but this would be very stupid to do that. That is not the correct way of trading. It would be shooting ourselves on the leg. We just take profit for a maximum of 1 to 10. I just prefer 1 to 8 max, 1 to 6 thereabout. Just something 1 to 6, 1 to 6, 1 to 7 is okay. So you can see this one went for a 1 to 28 risk to reward, nearly 1 to 30. As if that was not enough. That is the good thing about indices. If you are somebody with the ability to hold, this is 1 to 47 to reward. It is unnecessary. You just need to take your 1 to 10, or that is should be your maximum 1 to 10. If the market is not ranging, if the market is ranging, just target to get 1 to. At the close here, you can just look to add maybe 1 to reward of 1 to 7. There you're good to go. This would be my overall trade. Then the following day I'm also supposed to be selling, because the market is heavily selling, so I have no business buying. So I come here and I start monitoring. This is the first candle of the first candle of the day. This is the first candle of the day. This is the second, and then this is my entry candle. So I need the liquidity to be taken because we are selling. And then I shift to 5 minutes. I shift to 5 minutes to look for entries. I shift to 5 minutes to look for my entries. So take a maximum of 2 trades per session, per entry, per day, actually per day. Now so let's see, this is where the market started, and this is where the liquidity was raided, and then what do we see? We see that the entry present itself at what time? This is just barely 10 minutes to the last candle of the day, so this would have been 50-50 for me. Or if I entered, I would have closed, I would have break even by the time this was a break, was a break of structure here. This is the last hour. This is literally the last hours. This is 12 p.m. This is the last hour of the candle. So this is most probably a fake out. So it doesn't matter. I know I would have walked out with half a loss or a break even. Then I wait for the second one. This is the high of the previous 4 hours, by the way. This one here. And then the momentum is still on our side, so we just relax and wait for it to be raided, and then patiently we wait for a double close while still obeying the last hour rule. So this is 2 candles close in our direction, then this should be our entry candle. We short from this particular entry candle somewhere around that region. Stop loss 200 pips maximum, so this would be 196, 190, fine by me. And then we hold to the low of the day. Where is the low of the day? This is the low of the day. You can add in some point, that is 1 to 6 is to reward, so maybe we can add in some more points. Maybe you can add in some 1 to 8, 1 to 6 maximum. So the only way to leave this particular place, to leave this, as you can see, for this trade, this is the take profit, this is the low of the day. So when we got this 2 candle close in our direction, it was worthy to leave. It was okay to leave, especially after this pullback. It was okay to leave, or you trace your stop loss somewhere here. So this would have netted you 1 to, you would have taken 1 to 6, or unless you wanted to hold more. Same. Now look at this. This is the low of the day, but as you can see, there is no candle closure to signal that the trade, the momentum is dying, until this is where the momentum died. When these two candles closed in opposite direction, this is where the momentum died, and therefore this is where you need to leave. That is the power of using Heikin Ashi. So when these 2 candles close in the direction, it signals that it is time to leave the market. So if this is where you left the market, you should have walked out with 1 to 16 risk to reward. Now this other pullback are opportunity to scale in, these ones, so don't fear them. These ones are opportunity to scale in, especially this one here. If you want to scale in a position that is already moving, this one, you should half your risk here. After halving your risk, you shift to 1 hour, so that you can compound that one, that risk, that half a risk that you've taken. You can shift to 1 hour and look for a liquidity raid and a 5 minutes close in a direction, and then now you go full. After that liquidity raid in 1 hour, you go now full break even on the first position. So you can see this is where we have 1 hour liquidity raid. When this 1 hour liquidity raid gives a position and then you get into it, you should go full break even. So you go to 5 minutes, you scale in that half a position that you added. That half a position you added, you need to now fill it here, or you can go full BE. When you see it forming, you can go full BE in the other position and add that risk you placed on this trade to this particular new position. You can add here. You can see where there is liquidity raid. This is where liquidity raid happened, and then we get 2 double close. So you can choose to go full break even on this. Let's wait a little bit, and then you wait 2 candle closure in our direction. So will it give you 200 pip stop loss? This is 240. So you can look for a slight pullback to 200, then you risk this amount of money you risked here. Same target take profit. You can see this one you could have worked out with a 1 to 5 here, then you leave the rest to be a runner, or you can just be trailing everything and squeeze out of the market. So these ones will be very clear when the market is not being choppy. So for the next 1 week, don't expect the market to be cleaner on this particular pair, so expect some level of choppiness. So let's just recap a little bit on this thing before we can call it a day. I don't know where is the checklist. Where is my checklist? I can't see it, so let's just delete everything and then have it fresh here because my PC is about to shut down. So what have I said? Check for 1 day time frame for the direction bias. Use 1 or 2 candles rule in Heikin Ashi. I've explained that. Check previous 2 stroke 4 hour candle for the market momentum. At least one should have closed in a direction. If 2 close, that is high probability setup. Now use Ashi candles to look for 4 hours, 5 minutes liquidity rates, and then look for entries. Avoid taking trades in the last hour of the 4 hour liquidity read. Now the last one that I'm not written here is that if 4 hours is giving you closure, 2 closure in one direction, and you also have the backup of we are within the pullback of supply and demand, that makes it high probability. So guys, we can stop from that point. My laptop is about to shut down. It shut down automatic, so you will bear with me for now.